never stop buying stocks, especially now. Don't stop buying. So in today's episode, we take a look at the Mag7 versus the rest of the Mag7 in the S&P 500. So what you can see here in this chart from Bloomberg, we can see the US equity valuations for the Mag7 versus the rest of the S&P 500 minus or X Mag7. So generally what we see is in this greenish line is the Mag7 valuations have always been a bit higher than the rest of the market. And they deserve it. They have better growth, more sustainability. So you're willing to pay a premium for those stocks, right? And because of a fabulous growth, the Mag7 actually make, as of 2024, roughly 33% of the S&P 500 market cap, which is a bit dangerous and stretched, for sure. But in the recent drop, especially now with all these tariffs confrontations, I think this is a great buy-in opportunity. And today I want to show you two of my favorite Mag7 stocks that I think will make at least 20% return from now until March 2026. But first, let's take a quick look at Nvidia, since this is widely discussed. So there's a lot of analyst forecasts. At the high end, they're predicting a stock price of $260. I don't think this will happen. I don't think Nvidia will go down either. So based on the forecast, it will have an EPS of and it will have an EPS of roughly $7 in 2028. If it continues to have that growth and a PE ratio of, let's say, 25, this makes it let's say $200 stock. So I think these forecasts are a bit stretched. Nonetheless, I think it will make a great return. From $120 to $200 is a great return over 3 or 4 years. But I don't think it will double anytime soon. So, and now we come to one of my favorites right now, Amazon. It has an EPS of roughly $5 here, and is expected to have an EPS of nearly $12 in 2028, which is very, very great. It's doubling its EPS, and also on the revenue forecast, it's expected to grow at least plus 60 to 70%. And a better way to look at Amazon from a valuation perspective is price to operating cash flow. And we see this industry doesn't look good, but compared to its historic operating cash flow, which used to be well above 20, nearly 25, this Amazon is currently very, very nicely priced and cheap. So at roughly 18 price to operating cash flow, you get the stock at a bargain. And they have great investments such as Anthropic, robotics, AWS, which is the number one cloud computing platform. And you can see in the stock price, the last good time that you should have bought it was in this carry unwind trade in August 2024. So if you missed this, buy this now. And let's compare to its peer group, Alibaba. There's not a big change, not a big difference, or Mercado Libre. Also, these stocks are quite expensive, or quite nicely priced compared to Amazon. And this is US-based stock. So if I have the option to buy new US equity in comparison to the rest of the world, I should do. And my other favorite stock is Google. So the growth of Google won't be so great compared to Amazon. Nonetheless, its current price is also not that high. It's expected to have a nice revenue forecast of at least 10%. And here we take the historic PE ratio as a comparison. And you can see usually it's well above 20. But today, as of today, March 25, it's actually sitting at below 20, which is a great valuation for Google. And they also have great growth prospects and great investments such as Waymo. So I totally recommend to buy either Amazon or Google or both at these valuations. And if you need to find any trade ideas, I like to check TradingView, and here you can see, okay, this stock could fall until 12 times earnings, but I don't think it will. And they might have problems regarding AI and its search business, but I'm actually quite optimistic that they will be able to replace it with Waymo or Gemini very, very soon. So these are my two trade ideas. Enjoy and take the risk. Never stop buying stocks.